Hi there. Today I'm going to talk to you about mileage versus actual and for your vehicle expenses. Now, in practice, I've seen people incorrectly deduct vehicle expenses in all kinds of ways. I've seen people deduct the vehicle payment, which is actually not correct unless you're leasing a vehicle. But if you purchase a vehicle, you can never deduct the principal portion of it if you've got a loan on the vehicle. So I'll get that one out of the way right away because I think a lot of people are confused on that point there. But really there are two methods you can use. One is the mileage method and the other is the actual method. And which one you decide to choose. I mean, usually if your vehicle costs $30,000 or more, then using the actual method would generally be better than using the mileage method. But what I always say is in the first year, you can choose between the two methods. So you could track, you're going to be tracking the same information in either method basically, or you can. And so we can make that determination at the end of the year. We'll just compare mileage versus actual, which one's works out better. Now, some people say, well, who has to pay the car payment, me or my business? I have never seen the IRS get that persnickety, honestly. I mean, if you've got the vehicle, you're using it in your business, as long as you're keeping the substantiation, I just haven't seen the IRS give people a big, hullabaloo about, who is technically owning the vehicle. They're more practical. And so I would say choose between the mileage and the actual method, and that should be sufficient. Now, the actual method, you're going to deduct the cost of the vehicle over 5 years, which is called depreciation, okay? Or you'll deduct and when I say the cost of the vehicle, it gets more complicated in everything I say. I'm just going to kind of be simplified here. Cost of the vehicle over 5 years, the repairs, maintenance, insurance, all of the gas, all of those actual expenses. Now, the mileage method is just what it sounds like. You get, for every business mile, you're going to deduct, it's usually about 55 cents a mile. It changes from year to year. And so you keep track of your business mileage, also your personal mileage, and then give me the total mileage for the year, but also just your total business mileage. And obviously, I'm most concerned with the business mileage because that's what you're actually going to deduct. But in terms of like record keeping, now here's the big crux of things. And I'm going to share my screen now. Okay, so what is the IRS? Like if they were going to come, audit you on your mileage or your vehicle expense, what would they be looking for? Well, they're going to look for, either method, they're going to look for a lot of the same things, honestly. I mean, they have taken the actual method and they have not allowed people to take that deduction because it didn't have a mileage log. They've taken people who did the mileage method and they didn't allow them to have that deduction because it didn't have, copies of invoices, automobile expenses, inspection receipts, if you get your oil change, keep all that information basically. So in terms of tracking, I would say there's not a huge difference technically in how you want to be tracking these things if you want to be really well prepared for an audit. In practice, does everyone do everything that I recommend? They don't. So, minimum, obviously, for the mileage method, you've got to keep a mileage log. And that is usually covered for mile, you do like an app like Mile IQ, or you can get yourself some kind of mileage log book. And really it's going to it's got your calendar in number of miles. And then here you're going to mark what kind of mileage, business or personal. Now what is business mileage? What's personal? If you're using, if you've got, it depends, of course, but if you've got like a home office, then essentially anywhere you go from your home to do business is going to be business mileage. Now, let's say you don't have a home office. You've just got an actual office you go to every day. If you're going from home to that actual office, then that's called commuting, and they don't, the IRS isn't going to give you that as business mileage. So, this method you'd use business. Another even simpler thing than this is if you just have, a few places you're going consistently that are business mileage, you just keep a calendar and then say, okay, here are the 5 places I go, and you just use a shorthand for it, like, okay, here I'm going to the A, B, C, D locations. You calculate the number of mileage, round trip for each of those locations, and then every single day that you make a trip on your calendar you've got in your car, you just mark, you put an A or a B or whatever it is that the place that you're going to, and then add them up at the end of the year, and then you can calculate the mile, multiply it out, and then you can give me the mileage that way. One thing I'll say with, so again, who pays all of this is, in practice, I've seen it be less of a sticking point. If you pay for it personally, or if you have the business pay for it, the key is you just want to be tracking it well. So if you've got 3 different vehicles you're using in the business, you're going to want to make sure if you're using mileage method for one and actual method for the other 2, you've got to keep everything separate. So, I've got my P&L tracker here. I mean, I've got a way to do that. And as long as you have a way to do this, it doesn't matter what you could be using QuickBooks or whatever else. Okay, so here, by doing that in my P&L tracker, now it's saying vehicle expense, insurance for the Honda Accord, insurance for the Ford F-150, insurance for the Jetta, and same with fuel for the Honda Accord, fuel for the Ford F-150, the Jetta, and same with repairs, right? So we're tracking everything by vehicle. This is most important, again, if you are using mileage method for one vehicle and an actual method for other vehicles, right? If you're using different methods for different vehicles, then I would say track your insurance, repairs, all the actual expenses you're going to track by vehicle. Because you can still run them all through the business, have the business pay for everything, but then, we're going to have to back out. Let's say we're using the mileage method for the Honda Accord. Well, you still are going to track all of this stuff on your business card and through your business account. But this way, we're going to, make sure we're not going to deduct it twice by taking mileage and the actual. Okay. So the other thing I'll say, again, the IRS wants to have a mileage log for both of these. Now, in practice, are they really going to get rid of that? They can, if you don't have a mileage log for both. In practice, I don't know that they would always do that. The other thing to know about the actual method and the mileage method is that there are certain expenses that you get to take no matter which method you use. So if you have a loan on the vehicle, interest expense, the interest portion of the loan payments would always be deductible. If you have tolls, parking fees, things like that, all of that would be deductible regardless of using the actual method or the mileage method. Now, once you choose a method, you have to stick with it. So you can't go from one year using the mileage method and the other year using the actual method. For each vehicle, as long as you're using it in the business, you've got to stick with that method for that vehicle. Okay, and then the other thing I'll say with the actual method, like I said, depreciations take the cost of the vehicle, we divide it by 5 years. Technically, let me get a little bit more nuanced there. Technically, it's okay. Let's say you already owned the vehicle, and then you started a business. In that case, you would take the lower of the cost of the vehicle originally, or what it was worth when you used it in the business, and that would be what we would depreciate over 5 years. And then let's see, what else did I want to say about that? The other thing I would say is if you're going to buy a vehicle, give me a call. I mean, the IRS feels like there's been abuse around expensing vehicles. And so they put in a whole bunch of rules and regulations, and, deducting vehicle expenses the wrong way is a quick way to get yourself audited. It can be a red flag area. So, and the worst thing is I've seen people spend $125,000 on a vehicle thinking they can just expense that in 1 year. only to find out that the vehicle didn't meet the criteria that the IRS has set, so it would be deductible in that year. So generally speaking, what's deductible in the first year, it just, it depends. Give me a call. But generally speaking, I will just say, I would still give me a call before you make a purchase. But generally speaking, if you're buying a truck that's at least 6,000 pounds and the bed is at least 6 feet long, or if you're buying like a cargo van type thing where the back is completely enclosed, separate from the front area, and it really is truly just a work van. Not that you're just using it for a work van, but that it can only be used as a work van. So again, the back has to be at least 6 feet long. It's got to have shelving. It's got to be made for like a work truck or a work van. So and then there are again, there are between 6,000 pounds and 14,000 pounds. There are limitations on how much you can deduct in 1 year. So just don't go buy a vehicle expecting, hey, I can expense this all in 1 year. It can depend. And I hate seeing that someone spends $125,000 only to find out they can only expense $6,000 that year. That is not a good answer. Okay, so if you have any other follow-up questions, I'm happy to answer those, but this is kind of the brief overview between the mileage method and the actual method. So who pays for it, in terms of the actual cost of the vehicle or the vehicle payment, to me, it doesn't really matter. You can run that through the business, or you can run that through the mileage method, or you can pay for it personally. Just make sure that at the end of the year, we're picking up the interest expense on any loan payments you've got, regardless of the method you're using. Honestly, to me, it's easier to just pay for it. I mean, it really doesn't matter. If you pay for the payment personally or through the business, I almost think it's easier to pay for it personally and then just look at the loan statement to figure out what the interest was for the whole year and give that to me, or already have it in your bookkeeping. So I'm not so concerned about who's actually making the payment. Just rather, let's make sure we're picking up the interest expense on whatever loan payments you're making. And we can't expense the principal payments again. So most of those payments you're making, unless you're leasing the vehicle. If you're leasing the vehicle and you're using the actual method, then you can expense, again, the fuel, repairs, maintenance, insurance, and the lease payments. Now, of course, if it's 75% business use, then all the actual method you'd multiply by 75%. So you'd only depreciate 75% of the cost of the vehicle. You'd only write off, if you were leasing, you'd only write off 75% of the lease payment. That's assuming, again, 75% business use. Okay, so I think that is kind of my brief summary of all of this. Again, regardless of the method, you're still going to want to keep receipts for all of your actual expenses. You're going to want to keep anything that can kind of corroborate your mileage log, because they're not just going to ask for your logbook. They're going to say, okay, show me your your oil change, last oil change substantiation, and let's see what the mileage says there, and see if it matches up to what your mileage says is supposed to be per your mileage log, right? So they're going to be trying to poke holes in your mileage log, and if they can, then they'll throw out the whole expense, even if it was legit business use and legit business expense. So again, I'm cognizant be cognizant of these methods that you've got to use. Some people just want to keep it really simple. They try to just give me the beginning of year and the end of year mileage and say this is 100% business. Just know that if the IRS were to audit you, that's not going to hold water. So, you do want to have a mileage log that says, here's the business purpose, here's where I actually went, and here's the date. That's what you need. And then you want to have also, even if you're not expensing it, you should have copies of your gas and oil and all of those receipts proving that you were paying all those expenses. So, okay, that's all for this one.